All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Friday. It is the 12th, and I love to do these videos at the end of the week on Friday. It's the video that I really enjoy doing, especially when we've had a really nice week in terms of performance. It's kind of the icing on the cake, and then we can kind of just go through the day's activity as well as what we saw for the week and start to think about a game plan for next week, right? To take kind of all the information that we got today as well as this week, put everything together and think about how we want to position for next week and what kind of strategies that we want to think about. What are the week's events that we want to think about? So let's first talk about today, and then we'll talk about the performance for the week. But today, my goodness, we started the day. So the first thing that I woke up to this morning was that good data out of China. The credit that they had was better than expected. There was a credit report that was better than expected, and when that happens, when China is getting right now better than expected economic data, or they're doing something for stimulus. The market just globally loves it right now. So that has not worn off. So as long as they had, remember a couple of weeks ago, or I think maybe it was a week and a half ago, they had good, what was it, ISM or PMI data that beat from very low expectations, and that whole market just went nuts. So that's what happened last night, and by the time you woke up this morning, you saw that futures were starting to really move, and that was around 6 o'clock this morning. Futures were up about 30-40 basis points, and then we had some follow-through things happen, like an energy deal, and the market really took to Disney, which we'll talk a little bit about Disney as well. But then we were off and running. By the time it was 9:30 in the morning, S&P futures were up over 0.5%. Small cap futures were up even more than that going into the open. So what did we get? So really, what we try to do in the morning, if you're a member of Tribeca Trade Group, you know this, so you could try to ignore me for a minute. But if you're not a member of Tribeca Trade Group, what we do is we have a pre-market session where I kind of try to build in some strategy for the day. We definitely look at some charts, but I had said, the pre-market session was actually I was done with it about 5 minutes to the open, because I said, hey, I'm just going to be looking to kind of take targets in anything that I've got on that is short dated, right? I mean, my plan always when we have these gap up days, and particularly on Friday we've been getting them, is to clean out a lot of short-term positions or positionings that I have on in options. The stock is kind of at the end of the list, right? The stock positions that I've got positions on for all different time frames. Short-term catalysts, kind of mid-term swing trade positions and options, and then I've got my longer term stock positions on. So really I always attack and kind of clean out of short-term positions. That gets very difficult. I think gap up days are some of the hardest days because you're fighting with market makers. Now, of course, you could hedge a little bit, right? I mean, you could sell some stock so that you're not rushed to get out of positions, but it's a balancing act, especially when the market is moving that quickly on the open. To try to get out of things, and you kind of miss some things on the open if you're doing what basically I was doing, which is trying to really kind of get out of some risk, because I know a lot of times that we have this that happens right after the open. Maybe we try to go a little bit higher, but then we start to go down, down, down. So it becomes, and the market makers, I think on purpose, are wide around the open, and you can't get out. It's tough to get out of positions. Sometimes you get stuck. That happened to me into one or two positions I had today. One which was AMD. I was trying to take a target, and it's tough as well to estimate what you're going to get, because the market makers have a way of adjusting that implied volatility in the option so that you may not get what you thought that you could get. Again, a lot of that you could do a little bit of hedging too. But that's a lot easier when you only have a couple positions. If you've got many positions on that you're trying to take targets, it's a lot to handle in the first 15 minutes of the day. But you could see IWM which I mentioned, IWM small caps were leading going into the open, up about, I think, about 80 basis points, like just under 1%, and they gave it all back in the first hour and a half. Now they found support and they held in there. They almost went red on the day. I mean, that's a pretty decent swing from, for just an hour to see decent selling pressure come into the market like that. So again, these days are tricky. Gap up days. The other thing that I always find difficult with gap up days is you may do research the day before or pre-market, and it completely kind of discombobulates what your strategy was going to be, because I had some positions that I was actually looking at from the night before that I wanted to get into, and instead it changes your whole game plan of, hey, you feel like you have to get out of positions before this happens, right? So I think that's first to talk about. A couple of things that I did today. I've had a bullish swing on in Amazon. It's one of the first things, and I wanted to give members a little bit of a more of a clue than what I sent out on the private Twitter. But why did I get out of my Amazon position that expires that expired for April expiration, even though I just added to it yesterday, because Amazon just wasn't doing what I wanted it to. And again, adapting to the new information that was given today, which is that energy shares were going nuts, bank shares were going nuts. So when you have something like that, when other sectors start to perform and have kind of waken up, I like to call it like they've waken up out of a slumber. Sometimes what happens is you see that rotation. Portfolio managers are like, hey, this group now has some momentum to it. I need to get out of my Amazon. I need to get out of some of my tech or software plays and move over into the latest group that has momentum. It's just how momentum traders work, and some portfolio managers, more generalists, behave a little bit, because again, they're always processing new information, right? And we got a bunch of new information today. We got again, not only with Disney and that moving, but you've got we had a energy deal. And if you look at the energy, I was talking about this chart earlier in the day, but I did not show it. But if you look at the underperformance of energy shares versus the underlying commodity, oil, this is something I've been talking about now for the last couple of weeks. So you needed a catalyst for this to change. So let's see if I can bring this up. It looks like Bloomberg is really slow right now on my computer. But let's see. I think I'm using the USO chart. So let's bring USO, which should be, oh, I think I've got it XOP over USO. So it should be right here. Here it is. So again, these are all, the list that I'm going through are all what's known as like ratio charts, where you've got one in the numerator, one in the denominator, so you could see the relationship of one, either sector versus another, or the commodity versus the underlying equity shares. But you can see this is a 5-year chart. So XOP, why I like to use XOP, so that's in the numerator, and that is the equally weighted energy ETF. So you've got both your small cap, large cap names. No name really dominates. Every name gets the same weight. So that's in the numerator. In the denominator is USO, and you could see a little bit of outperformance today, but really, since the end of 2016, the underlying commodity has outperformed. So USO, which tracks WTI crude, has been outperforming, and energy shares have been underperforming based on what the commodity is doing. So perhaps that catalyst of a takeout could kind of change around the valuation a little bit. So here's the thing, right? So you have to think about what you want to do here, and we talked about this, was featured in our weekend newsletter. So last weekend I said energy looked great, and so really a nice move here. I mean, if you're not an expert on energy, and I'm not, what I like to do is, play the ETF unless I really have an opinion on one or two names within the sector. But you still have a couple dollars to go before you could get before that target of 34.72. Again, virgin point of control would be my target for this group. So what do you do with something like this, right? When you get all this new information on the tape, I personally try not to make decisions about, really like changing around my portfolio significantly when the market is open. I like to kind of think about it because I have to have what I like to refer to as conviction, right? I don't want to put on a trade and then, as soon as it starts to go down, I'm like, oh, why am I in energy? I don't really like energy to begin with. So I like to, I don't know, you could do this over a nice scotch, you could do it over a nice glass of wine or beer. You kind of think about it, and while the market is not moving, so quickly, and you're watching option activity, which I do every day, all day. I like to kind of think about it and make sure that, hey, do I really want to take a position in energy right now, and what am I looking to achieve from it? Do I have that conviction to stay in it? So my early thoughts on this are, after a big move, if you want to get more into a group and it rallied and where it's up 3.3%, what I normally do is I take a really small position. Because sometimes what we see is the group can just keep going. So at least you have some exposure if it happens to do that. Because sometimes it doesn't give you a chance, right? I mean, here's a name, completely separate, this MRVL. This never gave you a pullback in this thing. There's a bunch of traders. Congratulations. I won't say your names on the video because I didn't ask for you to, didn't get your permission. But we've got about 5 or 6 different guys who have been playing this name. And I said my target would have been all along. I was in this too, but I certainly have been long gone in this thing, but I would be taking profits up here at this point. But this thing never gave you an opportunity to buy the dip. Just unreal, this MRVL. Best performer, I think, out of any semi-name, and also one of the ones that we've seen the most repeat option activity. By the way, repeat option activity, very important. A lot of times we see one-offs, and you never see another call, aggressive call buyer again. But when you see it time and time again, those are the things that you really want to pay attention to. And this is one that we saw option activity probably 5 or 6 different times in the last 3 weeks, I would say. But in any event, so that's kind of my little strategy, that if you really have to get into a position that you feel like you're being left out and you think it's a changing of the guards in terms of where people are going to allocate money, what I normally do is put a starter position on, and then if I'm right, great, I'm making money on the starter position. If not, if it happens to pull back into support and it kind of cools down a little bit, then you can kind of add a bigger, chunkier position. But you always want to think about that, where you want to get to in your position size, a little bit prior, and kind of think it through a little bit. Again, best to kind of have this plan already drawn out in your head, rather than when the market and momentum is really moving. By the way, video, of course, for information purposes only. Everything that I'm saying here is completely for information and not advice or recommendations or anything like that. All right, so we talked a little bit about that. Let's talk a little bit as well about adapting to the market's terms and situations, right? Like I said, on Twitter, I like to look at this about once a day. Now, of course, today was a gap up day, right? So you could see what the performance did. This is performance from the open, so not overall performance. So if you're confused by what I put out here on Twitter, it's nice because you could just really put a couple sentences out there. But when you've got a bigger concept to explain, it's sometimes things get lost a little bit. But really what I wanted to point out here is that, thinking about your strategy, what's working better is what is right now in the market is putting trades on at the end of the day or the beginning of the day better for performance. So it depends on the week. We've had some days where or some weeks, I should say, where we have really nice days from the open to the close, right? Where we're trending. Other weeks we have, which we kind of had this week, a lot of the move was overnight. In a couple days, we just didn't have any movement whatsoever this week. But this is the performance, and as I went over, the small caps underperformed, and then sector-wise, all over the place. Healthcare, which I'm going to talk about, that sold off quite a bit. But even like overall tech did nothing today. Was completely range bound today, while other groups took off. Interesting, the utilities rallied with regional banks. That seems to be pretty odd, but it is what it is. It could also be that the utilities opened up lower. Let's see, where they finished for the day. I thought they were one of the worst performers for the day. So it could be somebody bought the dip a little bit. No, utilities finished up 0.5%. So, so the next concept that I wanted to kind of jump to was the week's performance. So again, just thinking about how this works, I see a lot of people who, and I'm not trying to criticize anybody on Twitter, but I see a lot of traders on Twitter who kind of set up for the day and they're day traders on the open. Does that work for you, or has that been working for you, where you look to kind of scalp names, for the first 15 or 20 minutes? Or do you have to change your strategy and say, hey, I'm going to go long at the end of the day and cover on the open? I think personally that strategy has been working a bit more. I know long term, that strategy, somebody put out a study about a month ago on this. I forget who it was, where the performance overnight is much better. I got a lot of pushback on that on Twitter when I put that out there. A lot of people were saying, well, it's really risky holding overnight. Since when? Since one time 10 years ago there was a flash crash, or something happened in China. It's funny because people have those memories of something painful that happened overnight, and it'll affect their whole judgment of trading going forward. They're like, hey, I'm not going to hold things overnight because of that. And really, that could be a complete anomaly that happened. I had this conversation with somebody on Twitter who was trying to convince me that holding overnight is risky. And I'm like, since when? And they brought up a situation. And I'm like, yeah, that was 7 years ago. That's one data point, right? Versus, however many, 252 trading days in a year times 7. So it's just funny how that could scar someone about holding overnight. It's one bad experience and they will adopt day trading. So again, I have nothing against day trading. All I'm trying to do is basically figure out what the best strategy is. So yeah, I see a lot of traders who are constantly trying to squeeze, pennies from, rather than picking up the quarters and the nickels and the dimes. They're going after the pennies because they feel like it's less risk. So I'll leave it there with that concept. Let's talk about the week's performance, which I like to do again at the end of every week. I start this from last week's newsletter. So this is the weekend 4/6 newsletter, and then I just kind of type over it, and I just begin to write the weekend newsletter. So what did we have? So remember, the week prior, I talked about how we basically got, if you were an equity bull, or if you were bullishly positioned in equities, you got everything that you were looking for the prior week. This week was a little bit more mixed, right? There was a bit of choppiness throughout the week. Again, we definitely finished on the high point. If we go to the S&P, let's go to the daily chart and the S&P. I talked about in last night's video a couple different things, and I think I was wrong, so that's fine. Hey, I'm not going to be right 100% of the time. Nobody is, right? But I thought that maybe we could get a little bit more digestion and possibly a move down there. We didn't get that. One of the things that I did say is we could also resolve ourselves out of this little congestion and move higher, and we got that. So we are taking this next leg higher. It's pretty amazing. Of course, I think JP Morgan helping that a lot today, getting the financials going, a group that really has been dormant. Right? So where did JP Morgan end for the day? I think around the highs of the day. Yeah, I mean a gap up. I mean, so keep in mind, something to think about. Do you want to fade this strength in JP Morgan, or do you want to try to think that this is going to actually catch some momentum to the upside? I don't have the answer to that. I will tell you what I'm thinking. I'm thinking that maybe this group, and we'll see, because it was just the beginning of the bank earnings. Remember last time JP Morgan reported, which was in here, we basically, you got a pop for about a week, and then it was chopped. We tried to go a little bit higher. It failed at the 200-day moving average. Pretty decent failure at the 200-day moving average, and then got going. So I think it's going to depend a little bit about what some of their brother and sister banks do next week. But I think this is a nice name. It's JP Morgan is always one of those names that I would rather play. I think they've got pretty sound business altogether. Whether or not, always the case has been for me with the banks is whether or not they're in, if they can really capitalize, if their environment is, I guess, dovish, right? If they've got a really good environment, but I think it's still difficult, but it's probably, it's still a pretty cheap stock. So you've got 1 day pop. Let's see if we gap and go. I think that's possible considering that it's been nothing but chop. I mean, look at JP Morgan, hasn't done anything since, for what, a couple years? So I'm open to where I really haven't been before, is looking at a couple longs in this space. One of the names that we looked at this morning was BlackRock, which they report next week. But I really like this BlackRock chart. I didn't put on anything here because they report on Tuesday. So a swing trade is going to be a 2-day trade. And I think that's going to be difficult. But, I think the chart, again, a name that's really gotten beaten up. And, there's a lot of good, talented people who work at BlackRock. And they kind of capitalize on the market environment. So we'll see what they do next week. But that'll be a name that I'm watching. Also, Berkshire. We saw a tiny bit of calls in the beginning of the day. But if banks and rails and transportation names start to do well, this is this is also the biggest weight, by the way. I believe it still is in the Xlv Etf. But, really nice move there above the 200-day moving average. So these are things, we'll be going through more of this in the weekend newsletter. Last week we profiled energy and alternative energy. We hit a colossal nice trade this week in First Solar for alternative energy. But some of the other names, the other areas that we profiled, I looked, what I really looked, one of my goals to do is kind of continue to add value, right? This was our chart list from last week. I talked about XOP, I talked about First Solar, definitely one of the names that I was concentrating on. What else do we have in here? I do like to kind of comb through. Where did Oxy end up? That was another name that I thought was looking good. Oh, Oxy did not do good. All right, so I did not take this one, so that looks like a good miss. Yeah, and there was some funny price action. Like MPC was a name that we saw a lot of call buying in this week, and it closed on the lows. So the refiners are always a little bit different. And again, that's why I like XOP. Because, again, I don't know the major differences other than I know MPC is a refiner. But anyway, I can go on for a while. We talked about UNP, which reports next week. UNP is a trade I did not take, but actually had a real nice day. Today was at 1.7. The transports had a nice day today. We talked about Abbott Labs. Edward Life Sciences, which I took off my baby swing trade. Today it made that move that I was looking for, so nice move. All right, let me keep going here because I tend to kind of go on for a while. There's always a lot to talk about, so many areas of the market. So let me get to the sector performance. So this is, I did something different this week. This was last week's performance, right? Semis were up, not last week but the week before. Right, so just a glance at what were the best performers. And then you can remember ASHR was up 7.7 or 7.17% last week. This week, ASHR actually underperformed. So I just wanted to make sure because I thought China was a little bit too hot last week. So it was actually under the one of the worst performers this week. So could lead up to possibly, maybe it'll heat up again next week. We'll have to see. But XOP led this week. Financials, software had a real nice day on Wednesday. That allowed me to get out of some risk on Wednesday, which was really nice. I appreciated that. The one big day for software this week. Transports also up 1.6%. Again, the banks come up here a couple times. Semis, home builders. What didn't perform well? Metals and mining, biotech. So I wanted to talk a little bit about this. Look at Xlv finished down 2.4% for the week. You could see again the transports. It's not the transports. The Chinese internets were flat. And then just looking at international performance, so there was a lot of Europe that performed pretty well this week. Look at Austria, up 3.4%. Probably not a chart that you've looked at in a while, but look at what's going on with Austria. Now it did take out, I think it took out a Virgin point of control, but really nice performance. And if you start to look at some of these names within Europe, again, we'll be going through more of this in the weekend newsletter, so I'm not going to jump ahead, but some nice performance. I've been in an EFA swing position, EFA, and I forced a target in it today, but I think this has got more upside to it. So that's why I still have it on. But always good, I think, to make sure that you're hitting targets. Okay, so what else? So I think we went through the performance. I wanted to talk a little bit about healthcare. We'll start. So first of all, what is this? IHF, I think, is the managed care ETF. Really got hit hard today, down 3%. I don't know if there was just major selling or if it was political stuff that was going on, but look at UNH. I played, look at the volume in UNH today. And it also cut through the weekly value area. So we were talking a little bit about this in the room today, talking about this is what happens when an uptrend gets broken. It could be pretty violent to the downside. Talk about stairs going up and the elevator down. I mean, this UNH looks like it is breaking down quickly and on heavy volume. Also looking at the Xlv ETF, right? This is something that I was actually looking at some names going long a couple weeks ago, and this looks like it's breaking down too. Now, there was a big trade in this, and I think that there was a big seller that was doing this over the day. You could see right 4 minutes before the close, 1.9 million shares traded. What does that equate to? 1.9 million times 89. So my guess is they were selling there's $170 million of healthcare that I believe that they were selling. I'll find out when I analyze the ETF inflows and outflows, but I believe they were selling that and throughout the day, and then they just printed it they printed the ETF at the end of the day, which you can do that. They will go ahead and the way Reg NMS works, if you're doing something like selling the underlying names in the basket, they will give you an exemption so you can actually print it all in one block, even though you've been selling it over one day. Anyway, that's a whole nother conversation. I want to keep the video under 30 minutes. So, but you could see something's going on here in healthcare. I mean, it's just broke the 200-day moving average. So this will be a group to watch for next week. Let's see. Do I have any other final thoughts for the week? Yeah, we talked a little bit about having a strategy. I think that's really important. The VIX is kind of where I want to leave for the end of the week video. This thing, is scaring me a little bit. I think overall I've been a little bit uneasy, and if you're a member of Tribeca Trade Group or you've been watching my videos, I've been saying that we're just getting a little bit too heated, and I'm getting to the point where I have a tougher time hanging in positions because I think volatility is going to show up around the corner. Or maybe knowing that we've been on such a nice run, keep in mind next week and the next couple weeks is we're going to be getting into the heart of earnings season. So what did I do today? I always try to practice what I preach. I just said, hey, listen, I had another beautiful week in performance. Let's not get too crazy greedy here, and I just started kind of taking down even a couple of my newer positions and just moving a little bit more into cash, right? I mean, that's really what happens to people, I think, sometimes is they you just get a little bit too greedy, and it's completely natural as a trader, right? Because we're always seeing new trades hit the tape, new setups and so forth, but you have to ask yourself, have you had enough performance at this point, and do you want to sit back and maybe let process the new information that comes out during earnings season? So again, I didn't completely blow out of all my positions, but more of the short-term names, and some of the names that I think have run a little bit. I would rather be a little bit more defensive here. The VIX is at 12. You have to ask yourself, where do you think it's going to get to? It could hang around here low, but at this point, I think I want to be a little bit more conservative. And just as always, I think earnings season is a choppy time. So I think it's going to be a pretty choppy next couple weeks as new information comes out. Now, we're going to be busy playing a whole bunch of earnings trades for names that I think could really outperform or perhaps not do so well. So we're really going to be concentrated on that and processing that new information. One name that I held on to, I did take a couple targets in this today, but we really set up a nice Google trade. And I'll promise I will leave it here for the week because we're getting to 30 minutes. But yeah, this did something a little bit different. It closed on the absolute highs today in terms of tech. If we go to my spreadsheet, and if you look at the other FANG names, right, you could see everything else. Netflix, again, this is from the open. Facebook, which I tend not to trade that much, but Google actually, performed very well. And I like this version point of control 1240 up here. So I have a trade on designed for that. Remember, we've got a couple weeks before Google reports, but so far the trade that I've got on is working. And, son of a gun, we talked about where this thing could get to for a day trade. Got right up to that top of value. So made its way from the bottom of value all the way through the top and hit resistance. All right, guys, so we'll leave it there. Have a great weekend. If you're not, I always say this at the end of the video, if you're not a member of Tribeca Trade Group, go ahead and check out the website. You could, of course, if you're a full-time member, we have what's called the Elite membership, where you could get access to our trading room, day trades, swing trades, everything. You could see how awesome our members of the room are. We have such a great team of traders who do all kinds of things, and we're all trying to help each other so that we can all make money. That's the underlying goal. That said, if you're not a full-time member, you can email me and I'll be happy to talk to you about a part-time member if you work full-time during the day, part-time membership. Thanks for watching. Have a great weekend, and I'll see you guys on Monday.